So, ladies and gentlemen, welcome back to another module of Agency Accelerator. In today's module, we're going to be talking about tax, finances, accounting. Now, I would say this is one of those things that seems like a massive big deal, but honestly, it really is not. Now, I will get into the general concept of basically how to prepare for taxes, how to file your taxes, stuff like that. Obviously, I do need to make it clear that this is not tax advice in any form or fashion, and that's simply because tax is different from jurisdiction to jurisdiction. So basically from country to country, it's different, but there are some overarching themes that are present pretty much no matter where you go in the world. So the first thing you need to understand is that there's a list of priorities for the government. The government is going after companies that owe $20 million in tax, or maybe this person who made a few $1,000,000 and didn't even bother to file a tax return ever, or is just full on trying to evade taxes. And I guess all of that to say that respectfully, at your stage, the government doesn't care about you. I'm telling you this right now, even if you were to illegally evade 10 or 20 grand in taxes, which obviously in this module, I'm going to show you exactly how to pay your taxes and make sure that you are prepared when it comes time for tax season. But let's say, for example, you didn't listen to my advice and you wanted to just not pay taxes. The government's not going to notice at your size, just being honest with you. They have a certain pool of resources. So let's say, for example, on one specific tax case, because they have thousands and sometimes even tens of thousands of people working for the government collecting taxes, for them to spend so much money to collect an extra 3,000 or 5,000 or 10,000 in taxes, it does not really make sense. So I just want to make it clear that you're really not on the government's radar until you start hitting hundreds of thousands a year, $1 million a year in profit, like at a minimum. So that's the first thing. The second thing is you're never ever going to go to jail for good intentions. And what I mean by that is when it comes to tax, I'm telling you right now, if you are the sort of person who is trying to pay their tax, if you paid it in an incorrect way, or maybe you did your filing incorrectly, you can always go back and amend those filings. So I'm telling you right now that if you're watching this module and you're like, hey, I know that at some point I will need to pay tax, and I'm keeping a log of my receipts, and that's the real benefit with this business model. We don't have a complicated business here, and everything, that's another important thing to mention, everything we do is online. So government is trying to go after clubs, restaurants, places that take a lot of cash, not businesses like ours where everything is digital. We have a full digital footprint of everything that comes in and out. So in our business, it's very easy because we're sending maybe 2 invoices a month. Maybe we're sending 5 invoices a month. Maybe we're sending 10, maximum 20 invoices a month. Obviously as you get further along in your journey, that'll be more and more, but everything is done online. It's either done through wire transfer, or if you're smarter about things, done through Stripe, so you can auto bill, or one of the other payment processors that Pierre would have discussed in earlier modules. So our business is very easy. We might have 5 or 10, income streams a month coming in on our cash flow reporting sheet, which I'm going to speak to you in just a little bit. And then we might have maybe 20, 30, maybe 50 expenses. But once again, those are very easy. If you're paying with card, you just take a photo of receipt and you put it in an albums folder. So on my phone back in the day before I had an internal CFO working at the company, and these days I have a very extensive sort of corporate structure with a little bit of complexity and this and that. So I pay a lot of money to have that stuff taken care of for me. But even when I was making a few $100,000 a year in profit, once again, I was paying for something with the business card. Let's say it was even a business lunch with a potential client, or let's say it was even a networking lunch where you're sitting down and you're discussing ideas, and maybe you're speaking to someone else in a different industry and seeing how that knowledge could potentially apply to your business. Well, then in most countries, obviously for everything I'm saying here, you do need to check the jurisdiction and you do need to check how it applies in your country. But for most countries, you're either going to be able to write off all of that business lunch, or maybe you won't be able to write off any of it, but that stays in the business rather than you having to pay yourself and pay tax on that. But we'll get into that in just a second as to sort of the 2 different structures. But the main thing that I'm getting across here is that it's very easy at this stage. And even until you make a few $100,000 a year, you pay for something with a business card or the card that you assign specifically for business. And I'll talk about that in just a second. Okay, cool. You take a receipt, you put it on your iPhone, an album, you just keep receipts. So that's it. And there you go. You have the itemized receipts for all of your business expenses. And then if it's something online, well, for anything you buy online, you're going to receive an email receipt including this program, and we'll get onto that in just a second. So anytime you pay for something online, whether that's a software or this program, and you know what, let me just address that right now. When you bought this program, this is a business expense. This is an expense that was needed to get your business off the ground. Now, you can either operate as a sole trader. So in other places in the world, I don't know how it's referred to, but I know specifically in the UK, a sole trader just means that you're a person, you're offering services, you're doing business, but you're just a person. And honestly, for most people, I recommend you're just a sole trader until you hit $5,000 or maybe $10,000 a month. Once you get to that point, so as a sole trader, or in the US, it's referred to as an LLC, because an LLC is this weird gray zone where you're not technically a company because you're a flow-through entity. So basically anything that an LLC makes flows straight to you. So if you are in the US, I would recommend that everyone creates an LLC, because it's basically the same thing as in the UK, for example, being a sole trader. So you're either a sole trader or LLC, basically for the most part operating not as a company. When you operate as a company, there's a separation and a difference between the company's money and your money. So for example, in the UK, once you create a limited company, and by the way, creating a limited company comes with a little bit more complexity. As a company, you can expect to pay your accountant anywhere from $200 to $800 a month. You know, if you're making up to $100,000, maybe even a few $100,000 a year in profit. So as a company, for example, in the UK, you're a limited company, and then let's say in America, you're a C Corp or an S Corp. Those have different functions. But the point is, as a company, the money goes to the company pays tax on those profits, and then once that tax has been paid, then that money flows to you. So in the UK, to give you an example, I believe the corporate tax is 25%. So let's say you have 100 grand, you pay 25% in corporation tax. So then you're left with 75 grand. And then from there, you distribute it as dividends, and you also pay yourself a low salary. So you pay yourself a salary, and that salary will be the highest amount that you can earn tax-free. I remember back in the day, it was like 10 grand a year was it your tax-free allowance. And then you pay yourself dividends, and the dividend sliding scale, from what I recall, was like started at 7.5%. And then you ended up at 38.5%, something along those lines. But anyways, as you can start to see, when you operate as a company, it starts to become a little bit more complicated, and there's a little bit more strategy involved. Now, obviously your accountant will handle all of this for you and will handle the strategy side of things for you. But once again, that comes with a cost. So that's why I recommend, until you're making 5,000, maybe even 10,000 a month. So I really recommend operate as a sole trader, or in the US, an LLC, which basically is the same thing. LLC is a limited liability company. So an LLC obviously limits your liability, which especially in the US can be quite beneficial. But at the end of the day, the LLC's money is your money. Like, it's the same thing. There's no separation like there is with a company. So anyways, going back, regarding the money that you spend on this program, well, I have good news for you, because that is a business expense. Whether you have a business or not, whether you're a sole trader, even if you're a sole trader or LLC, the point is that is still an expense for you to get off the ground. And even if you paid for the program today, and then let's say in 6 months you start a company, that is still an expense to get the business off the ground. So that's some good news for you. For pretty much everyone watching, you just saved yourself between 20 to 50%, depending on where you are in the world tax-wise. And the reason you save yourself 20 to 50% is because your profits, you only get taxed on your profits just went down because you were able to register this as an expense. Let's say as a sole trader, or even as a business, you're making 10 grand a month in revenue, you're not taxed on that 10 grand. So let's say you bought the program, that knocks down your profit. Let's say you bought a phone, that's a business expense. Let's say the Wi-Fi for your apartment, that's now a business expense that you need to operate the business. Let's say you buy a new monitor. Let's say you buy some headphones for while you're working. Obviously, as I said, each country is different. There's some countries that are more strict on that. There's some that aren't. For example, years and years ago, when I was first starting out in the UK, I always thought that you could business expense clothes. You know, you have to have a nice clothes, you're showing up to a meeting, or you're doing a presentation. But that was something that was always an issue, business expensing, at least with my specific accountant. Whereas there's some places in the world where, yeah, if you get a suit, you know, your suit is part of your work. It's a business expense. So each country is different. But the main thing to remember here is that you're only getting taxed on profits. So obviously try to business expense as much as you can. Listen, if you went for a random holiday somewhere, obviously that's not a business expense. But to be very honest, if you can set up a meeting, or maybe even a couple meetings there, no matter how tropical the location is, and have proof that you tried to sign a couple clients there, well, then now all of a sudden your Maldives trip becomes a business expense, because you can prove that you went there, and while you were there, you actually tried to sign the hotel as a client of yours. I'm just saying that there's a bunch of very creative ways that you can actually business expense a lot more than maybe you thought you were able to business expense. And just remember, you only get taxed on profit, not on revenue. So we've covered your tax structure, which, as I said, I recommend you operate as a sole trader or an LLC for as long as possible. And now all you have to do is keep a log of your income, which is obviously very easy. It's just the invoices that you send to your clients, and keep a log of your expenses, which is, as I said, when you spend something with your business card or the card that you have assigned for business. And let me just come back to that in a second. But when you pay for something with a business assigned card or / a business card, you take a photo of that receipt on the spot, you add it to your albums, boom, it's easy. And then for any email-based stuff, so for example, the receipt when you paid for this program, or let's say the receipt that you get every month when you're paying for softwares, in your email, just create a separate folder and then each time drag it into that folder. And now, boom, you have a directory of every single receipt ever that was sent via email. So you have your email and your physical receipts covered. My recommendation is don't play around with cash. That becomes a headache. You know, if you withdraw cash from the business, and it's just a bit of a red flag as well. So just avoid cash. And there we go. That is pretty much all you need to do to make sure that you have your books in order pretty much. And just going back to what I said about a business card, obviously, if you have a business, you'll end up having a business card for it. But if you're a sole trader, my recommendation is, let's say you use one of these online banks. So let's say you're using Revolut, for example. I recommend you have two cards. You have one card which is for personal use and one card which is for business use. Even though you're technically not a business, the point is just have two separate cards and obviously make sure they look different. And just for your ease of use, one card, you put all your personal expenses. The other card, you put expenses associated to your business. So once again, it just makes life very, very easy because you always know exactly what account am I spending business related stuff on. So now at this point, you're an accountant's dream because you have a separate email folder or a separate place where you can show all of the income that you had coming in. You have a separate email folder to show all of the online expenses. And then you have a separate albums folder to show all of the physical receipts. And that's pretty much about it. If you are a sole trader or an LLC, you're basically just gonna file once a year, and it's very simple. You just give all that information to an accountant. They format it to do your personal books or your books as an LLC. It'll cost you between $300 to $800 in my experience. Whereas if you're a company, you're paying $300 to $800 a month. So it's a lot more tedious. And there we go. That's pretty much about it. And then when it comes to you ever being worried, am I doing something wrong? Am I doing something right? The government will always be able to see quite clearly that you have a motive, you have a intention to pay tax, to be open, to be transparent, and everything is clean and everything is organized. And now the other thing, as I mentioned to you, in pretty much every country, there's something known as a tax-free allowance. So in most places, the first $10,000 you make, you don't even need to worry about paying taxes because it's not even applicable to you. So don't worry about, oh, I need to do this tax thing or that tax thing before I can go and I can sign my first client. Don't worry about that. Taxes are only something you should worry about once you make money, because if you don't make money, there's no taxes to pay anyways. And then if you're wondering how much money should I set aside for pretty much every country, you can find online calculators. So for example, in the UK, you just put in personal income tax calculator, and in there you just put how much did you earn, a couple other pieces of information. If you're operating as a company, it's very easy. Usually there's just a set corporation tax. So whether that be 10% as a company, 20% as a company, 30%. So all you need to do is you have to figure out your profit. And then from your profit, you just set aside a percentage of that to pay company tax. And then when you put in your personal name, when you distribute it personally, well, then in that case, you can go ahead and you can use those personal income tax calculators again, because on those calculators, it's going to ask you, how did you earn the income? Was it through salary? Was it through dividends? And depending on those things, it will tell you exactly how much you owe in tax. So yeah, that's pretty much about it. In future in the program, I do want to bring on tax experts in every single country and try to do one for Denmark, for UK, for US, and just try to get them to do maybe a 30-minute to an hour-long training about the specifics for your country. Because as I said, I'm just giving you the general framework wherever you go in the world, but I know for each country there are slight different nuances and things to consider. So I definitely will be implementing that training shortly. But for right now, this is just a general overall view. And this is really all to say that this isn't something you should be worried about. You should definitely be worried if you are the type of person that's just trying to evade taxes entirely, which quite clearly you are not. It's obvious for everyone to see. And in fact, you become an accountant or even the government's dream because you're so organized from day one. So a few other terms I think it's important for you to know. Revenue, a company's revenue is how much money they have coming in. Now, sometimes people say revenue even if the money hasn't landed. So that could be future contracts or future promises that haven't yet landed yet. So a lot of times when people say revenue, sometimes, let's say for example, they landed a $10,000 agreement and 50% is owed today and 50% is owed in 60 days. The revenue for that company in that month would be $10,000. Now for me, when I say revenue, I mean cash collected. And cash collected is how much money, what were your actual receivables that month? How much money actually came into the account that month? For me personally, I think revenue is dumb because in future you'll find out as a business owner, sometimes you have to write off revenue. There's certain revenue that never ends up coming in. So for me, when I say revenue, I mean cash collected. But just understand there is a difference between revenue and cash collected / receivables. Now, obviously expenses, you know what expenses are. So your revenue / cash collected, depending on who you're speaking to, minus your expenses obviously equals your profit. Now, there's also two forms of accounting. There's accrual versus cash. So when you're doing cash accounting, that basically means money in, money out. Accrual will take into consideration future revenue and actually bookkeep that for that specific month. So some accountants like to use an accrual method where, let's say in that example of, you sign a $10,000 deal today, but the other half of it will only be collected in 60 days. Well, then that is an accrual form of accounting. And that's the way that some accountants do it. But when I'm talking about accounting, I'm talking about a cash form of accounting. Just another thing to mention, when you are starting to work with an accountant, just create a Google Drive folder. And inside that Google Drive folder, every single month, you basically have your income. So you put the client invoices and then you put your receipts. So obviously your photo receipts as well as your online receipts. And that's basically all you hand over to an accountant. As I said, you become an accountant's best dream because everything's so organized and simple, and that's about it. So speaking of how do you actually stay on top of finances, now your accountant will do that for you, but I actually enjoyed doing everything myself, and I did that for years and years. And that's actually why I built a financial tracker tool. Now at some of my companies these days, it's so complex that unfortunately I can't use the tool anymore. And my CFOs for those companies, they send me cash flow reports every single week. But at some of my other smaller companies where I have business partners, I actually make my business partner do this every single month, go through this exact same financial tracker tool. And the reason I get them to do it is because it's such an easy way for you to see your income, which you'll know, but you'll start to see your expenses, and you'll start to see your expenses, how much you're spending on software, how much you're spending on team, how much you're spending on miscellaneous. All you have to do is click the link below this video. It will open it up inside of Google, and you can just go file, make a copy, and then you'll be able to use it yourself. So as I said, I still get some of my business partners to hand do this, even though we work with accounting firms, because it takes 30 minutes or an hour for those businesses because they're a little bit more complicated. For your one, it might take 5 or 10 minutes maximum, but you can see from a high level view, what am I maybe spending a little bit too much money on? What's my actual profit margin? Because a lot of times people think that their profit is a little too high. And then you can start to ask yourself, what's your profit compared to what's your bare bones profit? And what I mean by that is more sort of your gross margins. What money did you make minus the cost of actually delivering that? So, your gross margins, let's say on $10,000. So let's say on software and contractors, you're spending $2,500 a month. So let's say $3,000 a month. So you made $7,000 in profit. Now, let's say you spent $3,000 on a new computer that month, or this specific business lunch, or this thing or that thing. Obviously, your profit is $4,000, but that's not really what the company made, because you didn't necessarily have to buy a computer. You didn't necessarily have to go to that business lunch. So that's where it kind of helps you get an understanding of your actual profit, of your bookkeeping profit compared to your gross margins. So go ahead, start using that tool. I used to use that tool for years and years. So that way I just had a better understanding of my company, how lean it was running, where I could trim some of the fat, where certain things were unnecessary. And yeah, ladies and gentlemen, we're gonna aim to bring on some experts in specific countries, so that way they can give you some more specific context for the rules and regulations there. But this should give you a high level understanding of tax, finances, accounting. As I said, we have the massive advantage and blessing of being in a business model that is so simple, very minimal expenses coming in and very minimal invoices going out. So on that note, I hope you enjoyed this module, and I'll see you in the next one.